Good afternoon, everyone, and welcome to this hearing of the Budget and Finance Committee for Monday, October 5th, 2015. I'm Paul Krikorian, and I'm joined by my colleagues, Council Members Mitchell Englander and Bob Blumenfield. We're ready to begin with today's agenda. The first item on the agenda, I'm going to take out of order general public comment. Do we have any general public comment cards?
We do not have any general public comment at this time.
General public comment is closed. I don't know why that elicits giggles and laughter. General public comment has been dealt with for this meeting, but thank you. All right, we do have a number of closed session items, and actually, before we get to that, members, Item 7 I would propose as an item suitable for approval on consent, if there's no objection. Seeing none, Item 7 is approved on consent. We have closed session items 1, 2, 3, 4, 5, and 6. And I have no... Do we have no cards on any of those matters?
No, we do not.
All right, so comment on those items is now closed. Oh, I'm sorry. Okay, we've been requested to continue item 5. We'll continue that matter until the next meeting. So comment on items 1, 2, 3, 4, and 6 is closed. And we have a number of cards on 8, 9, and 10. As much as I would like to accommodate all of you, I think we do need to go ahead and finish our closed session items, and then we'll be back to you as expeditiously as we can. Mr. Bonin has joined us, and we're ready to proceed in a closed session. All right, we're back now in open session. Thank you all very much for your patience. We have considered items 1, 2, 3, 4, and 6 in closed session, and we're ready to proceed with agenda item number 8.
Item 8 is continued from September 21st, 2015. It's a motion, Martinez, Weezer, and Krikorian, relative to discontinuing the issuance of business tax registration certificates to medical marijuana dispensaries that are not in compliance with Proposition D.
Okay, members, we heard this on September 21st and continued it till today with a number of different suggestions. We do have a number of cards on this matter, so I'd like to hear from the public on this first. And just for the record, we now have a full contingent of committee members as well. So let's proceed now with a comment from the public. We'll start with Romeral Malvo, followed by Sarah Armstrong. Good afternoon.
Good afternoon. I'm Romero Malvo. I'm a resident of Leimert Park, one of the Crenshaw communities in Los Angeles. Thank you for bringing this issue to committee. The uncontrolled proliferation of marijuana dispensaries, without regard to the controls specified in the enabling legislation, is a problem for residential communities.
Please, can we keep the conversations down in the back, please? Can you start your time over again, please? Go right ahead, ma'am.
Do you want me to start again, or can I continue?
No, keep going.
Okay. There are no less than 6 marijuana dispensaries between a 3-block area on the Crenshaw Boulevard, and that's down from 12. I cannot believe that that was the intent of the original legislation. The problem is similar to the saturation of liquor stores in South Los Angeles prior to the council taking action to limit the number of new license issuing. There's a disconnect between the safeguards initially approved and their implementation. The motion is an opportunity to make a correction. I urge the committee to support the motion to discontinue the issuance of certificates to non-compliant dispensaries and to allow the prohibition against such dispensaries. I would also ask that you give consideration to allowing communities to prohibit altogether dispensaries through the community plan process. Thank you.
Thank you. Our next speaker is Sarah Armstrong, followed by Yamalith Bolanos.
My name is Sarah Armstrong. I'm the Director of Industry Affairs for Americans for Safe Access, which is a large national organization of medical marijuana patients. I'm here today because restricting LO50s just to those who are compliant with the city's policies gives medical marijuana patients an opportunity to only patronize stores that are operating with your blessing. Right now, they just have no way to know. Everybody's claiming to be Prop D compliant. Everybody's got an LO50 up on the wall. If the only people who had LO50s up on the wall were people who were operating with your sanction, then patients would always know that they were in a safe, compliant place. There are many things going on in these illegal shops that are not helpful to patients. In fact, they're very hurtful. I know you guys have been working very hard on this issue. It's taking a while. It's not your fault. But this LO50 restriction would really, really help patients, and I hope for that reason that today you'll pass this motion. Thank you.
Thank you very much. Ms. Bolanos, followed by Misty Wilkes, please.
Hi, my name is Yamile Bolaños. I'm a resident in the city of Los Angeles. I'm president and founder of the Greater Los Angeles Collectives Alliance, and I'm patient operator for Pure Life Alternative Wellness Center. And I am here in support of the resolution to limit the LO50s to only Prop D compliant collectives in the city of Los Angeles. Let's stop some of this confusion. Thank you.
Thank you very much. And our final speaker on this matter is Misty Wilkes. Ms. Wilkes, welcome.
Hi, I'm Misty Wilkes. I happen to be an Empowerment Congress West Area board member. I'm also an attorney licensed in this state, 2 other states. I've been trying to tackle this issue for a few years now, and it seems like there's no one really opposed to it. In conversations with police officers in our area, one thing that came that was mentioned to me was the issuing of the recommendations by the doctors, that sometimes these places don't have doctors and they're issuing the recommendations illegally, and perhaps we should consider limiting that, because maybe if we reduce the demand for the dispensaries, we can reduce the amount of dispensaries that are being opened. As Romero mentioned previously, at one point we had more than 12 in a 3-block radius along Crenshaw. Every time we get one closed, a new one would show up. It's sometimes the same place in the same business, sometimes immediately across the street or next door. I appreciate that you all seem to be trying to grapple this on a from many different layers, but I think we need to look forward and consider what will happen, and that it's imperative that we try to reduce the demand overall and look into the licensing process as well.
All right. Thank you very much. All right. I'd like to ask Finance to come forward, please. When we were last here discussing this, there were a number of suggestions and requests made by the committee. I'd like to ask you to just give an update on what's happened in the ensuing period of time, and then we'll be prepared to move forward.
Yes, Ed Cabrera, Assistant Director, Office of Finance. The Office of Finance has engaged the City Attorney's Office specifically with regards to language that can be added or amended onto the business tax registration certificate that would clearly denote that the certificate is issued solely for tax compliance purposes, that it does not reflect compliance or confirm compliance with Prop D. We do have some recommended language that is currently under review. In addition to that action, internally we are making design changes. We're looking at printing those certificates on a different stock and a different color that will be unique to the medical marijuana L050 fund class. And we are also taking steps to provide a list, which we already have. We provided a list to LAPD, City Attorney, and Building and Safety last week of all registered active LO50 accounts. Now, it should be noted that when we say active accounts, that would mean accounts that have not notified the Office of Finance that they are no longer in business. So the list may contain some entities that have been shut down by city attorney or LAPD, or they've closed on their own. LAPD and city attorney have provided us with a closure list that we will be going and amending our active list, but that list was provided in terms of the registered accounts, and we will be providing that information on a monthly basis to those three entities.
Great. Questions, members? Mr. Kretz.
So it sounds like we're changing the wording on the licenses, but we're not restricting the licenses to only the Prop D compliant places.
Well, the direction that Office of Finance received 2 weeks ago was to look at amending the BTRCs to reflect language that indicates that the BTRC does not convey compliance with Prop D. We're specifically doing that, and I would also add that we are also amending language on the business tax registration renewal form and the registration form, but that is in concert with some of the directions that were provided to city attorney to look at making some type of ordinance changes. But we are looking at adding language, again, subject to city attorney approval, that would require a LO50 to indicate whether they are in compliance with Prop D when they register for a BTRC or when they file a business tax renewal form. But I would defer to city attorney on their progress in terms of reviewing that particular action.
So from what you're saying, it sounds like of the, let's say, 800 places that are operating not under Prop D compliance, they can come in, they can sign something saying, yes, we're Prop D compliant, and they'll get a license that says, this doesn't guarantee that you're Prop D compliant, but here's your license anyway.
Given the fact that the BTRC is issued solely for tax compliance purposes, at this time, the Office of Finance has not received instructions or legal guidance that would allow us to deny a BTRC to be issued to any particular business, whether it's a LO50 or any other business.
So you can ask for anyone, whether you're legal or not, in any area of endeavor.
The Office of Finance is not a regulatory agency. We're simply a taxing agency. We don't have the ability to differentiate between what type of activity a business is engaged in.
So we still believe there's no way that we could give you a list of the 130, 125 Prop D compliant medical marijuana dispensaries and say, don't give them out to anybody else because they're not legal.
Again, I would defer to city attorney. At this time, the Office of Finance has not received that type of legal guidance that we have the ability to deny a BTRC to any business that requests such a certificate.
Because the rest of it sounds better than nothing, but a lot worse than something. The fact that people can still put something on their wall that makes them look compliant, and somebody has to get out a magnifying glass that says this doesn't guarantee that you really are legal. It's a step in the right direction, but it's a real modest baby step. And I don't know whether we've really looked seriously at the big step of whether we can limit that category to people that are actually Prop D compliant. Otherwise, you're just not in that category. You can't even apply.
Again, that would take a legal opinion from city attorney.
And has the city attorney been asked to provide such an opinion?
That would be up to this committee to make that request, sir.
And presumably we have not made that request.
What we're voting on today is the requests that we will be making to the city attorney and to finance to address the issue.
Would that not be included?
that was not the will of the committee the last time we heard this, because this is not an area that's limited to medical marijuana. There are any number of businesses that might be legally or illegally operating in the city, and it's not up to the Office of Finance to determine that because they can't. It's not in their skill set. They don't have the budget. They don't have the personnel. They issue pieces of paper and they collect taxes. That's what they do. What these recommendations will include is an additional assertion by the applicant under penalty of perjury that they're property compliant, and if they're not, they've committed a crime just by applying for the business tax certificate. So I think after our discussion the last time we were here, it was the will of the committee not to set an entirely new precedent of putting the Office of Finance into a position that they're not able to fulfill. That's really a law enforcement issue, and instead try to address what we can address, which is the confusion issue by the customer, by the patient. And we're addressing that with the form of the certificate, but also with this additional level of scrutiny that's provided by a declaration under penalty of perjury.
Well, I guess I would at least raise this issue for consideration. I think it's quite different from every other legal or illegal activity. There's an exact finite number of people that can operate legally. I wouldn't ask for finance to be identifying who those people are. I think we have folks that could identify that for them and working with them. Give them a list of the 125 or 130 people, and if you're not on that list, you just don't get a license. It's very easy to check. It wouldn't take any extra staff on their part, or it certainly wouldn't take much extra staff, maybe a few staff hours. Actually looks like a relatively easy solution to it, from my point of view.
The approach that has been suggested is actually getting to the same result from the other direction by having finance report the applications for business license certificates to the city attorney and to the LAPD, so that they would be able to use that as a method of enforcement rather than going the other way around, so that we can actually enforce against the illegal dispensaries. At least that was the thrust of our discussion last time.
Well, at some point, though, I would imagine illegal dispensaries would figure that out and they'll just stop applying for business licenses.
Well, and
which,
I'm sure
I guess would be the result we're trying to get at anyway.
I'm sure there are plenty that are doing that probably right now. That's not the issue that we're addressing with the business license certificate problem, which is more one of patient confusion and the inappropriate use of these certificates as some imprimatur of legitimacy. I mean, if they're bootleg operations and they don't mind being seen as bootleg operations, that's outside of the scope of what we're dealing with right now. Mr. Bloomfield?
And of course, they can also they can apply for a regular business license to sell paraphernalia or whatever, or gum, and they can get that fairly easily, and they can stick that on their wall. In order to sell marijuana, they need to have a marijuana or to collect taxes on it, but nothing's going to stop them from getting a license to sell gum, so they can have a business license if that's their end goal. A couple of quick questions. You mentioned there'll be a box that says, are you a licensed, or not licensed, but are you property compliant? And we were talking about having that be sort of an attestation or something that would bump up the legal liability of checking that box. Is there a way that instead of just one question on the form to make it more clear that, that this is answering inappropriately subjects you to perjury and a host of other things, as opposed to it just being another box where someone could say that they just, they checked off the wrong address or they checked off the wrong this or that?
Well, currently, filling out an application for a BTRC or a renewal form, whether it's done on a hard copy or online, there is a certification that is required subject to penalty under perjury. So we would have to have a dialogue with city attorney once they complete their legal review of what is permissible. But again, the goal would be to include language that would be very clear that the signee of that application or renewal form would be attesting and certifying that they are Prop D compliant, again, and subject to whatever legal penalties city attorney believes that the city would be able to impose.
But there's nothing, I guess we asked about it last week, 2 weeks ago. I was kind of hoping we'd have some language to look at or something that where the city attorney has opined on how far we can go at this point in time. But you're telling me we don't have, there's nothing to look at this point in terms of what that language could look like or anything like that.
And I think the short answer to that is I think the city attorney is not going to do that until we request that of the city attorney, and that we have to vote on that. Council has to approve that before the city attorney will
asking them to do that last time.
We'll do that. Yeah, but we have to pass it. We didn't pass it.
Okay, and then the second question is we talked about last week was there's 3 bills in the state that are, I guess they're still sitting on the governor's desk that could have a profound impact potentially on this. Is there anything that we should know about that or how that impacts?
Again, that's something that city attorney is reviewing, and we will be consulting with them once their review of those bills is complete. I think the application of those bills to the city's taxation of medical marijuana businesses is a legal issue, and finance at this time is not able to speak to that as it's pending city attorney review. I would defer to city attorney's office regarding that legal review.
Okay, well, I certainly want to get a report, to figure that out, because I think it's going to upturn a lot of it, the way we're dealing with it.
Okay. Members, anything further?
Just a quick.
Yeah, Mr. England.
No, I don't want to water it down, and I think it's important that this moves forward quickly. But just as a side note, we've run into a lot of these issues outside of just the Prop D compliant locations on business tax, period. If people have a certificate, they think they're legally allowed to then operate whatever business that might be by simply placing that on the wall. And I don't know if that's something that has come up previously to talk about the idea that they would actually maybe get something notarized to say that they understand this is not a license to operate any type of legitimate business whatsoever. Again, we've had this issue from unlicensed types of facilities without getting into deep discussion on it, of all types, and working with building and safety and working with many others trying to close down some of these businesses that patrons and others think they are legally allowed to either sell whatever they're selling or just simply operate. It's not a CUP. It's not even a license, really. It's simply for tax purposes only to get a certificate. And we have to explain this oftentimes to business owners that don't even know any better. So as long as we're going down this road, I don't want to slow it down, and I think it's really important as it relates to this, and it was put in for that specific purpose. But has that discussion come up before?
Not on any large-scale basis. We have, over the years, amended the language that appears on the BTRC to make it clear that the certificate is issued for tax compliance purposes only. We've added language that makes it clear that it conveys no type of land use authority. But certainly, sir, we can engage city attorney as a separate discussion as we go down this road with amending the BTRC language and changing the appearance for the medical marijuana businesses. We can certainly have that discussion with them to see, is there any other language that we can add to make it as clear as possible that the BTRC is not a license, it's not a permit, it conveys no type of regulatory authority for how a business is conducted. We certainly, sir, we can have that discussion.
On the certificate itself, we request or demand or suggest that they should or shall place that in plain view it has to be posted at the place of business. Is that correct?
Correct. Per municipal code, it has to be posted at the location of business.
Does it say anywhere on the certificate that this is not a certificate to operate? Or is that
there
just
is-
on the form that you submit to get the certificate?
There is language there is extensive language on the backside of the certificate. We moved some of that language to the front to clarify the issue over the last several years. But there is language that speaks to that. There's also language within the municipal code that speaks to the fact that the issuance of a BTRC does not legitimize a legal business acting illegally or does not legitimize an illegal business. So certainly we can take a look at the language that exists within a municipal code and make it as clear as possible on the face of the BTRC.
I'd request this then, hopefully we'll move this forward to council now. When this comes to council, can you bring a copy of the most recent language, the front and the back, of what we send to all businesses?
Certainly.
We could take a look at that at council. That'd be great.
Certainly.
Anything else, members? Mr. Bonnet?
I almost bit my tongue, but I have a couple questions. Because I'm kind of where Mr. Koretz is on this, but I'm fine moving this forward. It's better than what the current situation is, although I think there's a common sense fix that we're not getting to. I just want to be clear on what your position is. I understand you just issue a piece of paper for tax purposes and that you don't make a judgment call. So if a pimp came in and said they wanted to do pimping, you would issue a certificate for that?
We issue certificates to all businesses for tax compliance purposes only. Obviously, sir, if we have a situation where someone is clearly operating in illegal activity, although we have no legal authority to stop the issuance of the BTRC, we would do whatever we would need to do to consult with the city attorney to see what avenues or options are available to us. But we have had legal opinions in the past that clearly indicate that the Office of Finance does not have the legal authority to deny any business requesting a BTRC to have that BTRC.
Okay, then that's something I really want to tease out with the city attorney's office, because to me that just doesn't make a lot of sense. I understand why it's bureaucratically difficult, staffing-wise, but it just doesn't make a lot of sense. Right now, you issue certificates, and it could be for businesses that are not in compliance. You don't have to check to see if someone is licensed to sell alcohol before you issue something for a tavern or something like that. You don't have to, I guess, check to see if someone is licensed as a barber or a hairstylist before you would issue one for a hair salon. Do other cities do it that way?
I'm not aware of what other cities do. The city of Los Angeles is unique in the sense that it's one of the few cities within the state that has a gross receipts tax. A lot of cities issue business licenses that are regulatory in nature. They are permits. They do speak to the legality of businesses engaging or not being able to engage. Unfortunately, that is not what a business tax registration certificate is for the city of Los Angeles. It's solely a device used to collect taxes and administer the city's various taxes.
I understand that's how we do it. I'd like to get a sense of, and perhaps we can ask CLA to do some digging for us about what other cities do. I understand this is how we do it. Maybe what I'm getting at is maybe this isn't how we should do it. And I'd be curious what Santa Monica, Long Beach, Burbank, other jurisdictions do. If CLA could look into that.
Okay. Thank you. Anything else, members? All right, so we have 6 recommendations that are on the report. One was to continue the matter to today. That's obviously been done. Recommendation 4 was a request to see whether we could have some of this discussion in closed session. The city attorney did not feel that there was appropriate basis for that for today. But that leaves us with recommendations numbers 2, 3, 5, and 6, which would call for attestation under penalty of perjury from the city attorney on both renewal MMDs and new MMDs. A report back on from finance with the city attorney on modifications to the BTRC form to clearly indicate that it is not the city's imprimatur. Recommendation number 5 would provide for the automatic reporting process between finance and law enforcement that we had discussed. And recommendation number 6 would call for a report back on ways to prevent MMDs from misleading the public by displaying an either out-of-date BTRC or a BTRC issued for purposes other than marijuana dispensing. Mr. Bloomfield.
We also include the report back on the interaction of the new state laws with this issue, or would that confuse the issue?
No, I think we could certainly ask the city attorney to report back to this committee how these issues would be impacted by that. Sure.
We could add that.
Could we include the CLA reporting on how other cities handle BTRCs?
Yes, we can do that as well. So with those changes, any other comments, suggestions, objections? Seeing none, it will be the action of the committee to advance those recommendations to council as we've amended them. Thank you very much. That brings up item number 9.
Item number 9 is an Office of Finance report relative to business tax reform measures.
All right, why don't you go ahead and give an overview of the recommendations in item number 9 before I ask the public to come up and give comments, and then we'll go to questions.
Certainly. Once again, Ed Cabrera, Assistant Director, Office of Finance. Thank you for the opportunity to speak to our report. As this committee certainly has heard, and full City Council, business tax is often a topic of discussion. But what is often lost in that discussion is the fact that over the last 15 years, this committee, as well as full council, the mayor's office, prior administrations, and prior city councils have taken concrete and effective action to provide business tax relief to the city's various businesses. Over the last 15 years, the Office of Finance has implemented business tax reform that has provided almost $900 million in tax relief to the city's businesses. Part of that tax relief emanated from council and mayor action taken in 2000 to offer a small business exemption as well as a new business exemption to qualified businesses. The Office of Finance has taken a look at those exemptions, also looked at other administrative remedies that could provide easier compliance for businesses, also make the small business exemption and new business exemption more equitable in terms of those businesses that qualify. And we've looked at a few other administrative corrections that could provide a greater tools for finance and greater flexibility for finance to provide a better service to businesses in terms of overall enforcement of and administration of the business tax laws. Specifically with regards to the small business exemption and the creative artist exemption, there are qualifying criteria that must be met in order for businesses to receive the small business exemption or the creative artist exemption. And that criteria requires that businesses register for a BTRC timely. They're also required to file their annual renewals on a timely basis. Unfortunately, we have found businesses that otherwise would qualify to receive either the small business exemption or the creative artist exemption, but due to the fact that they failed to register timely or they failed to file a timely renewal, their exemption was denied, and that's based on the language within the ordinance that finance was enforcing. We have a similar situation with the new business exemption in that a business, in order to qualify, has to register for a BTRC timely. And again, if they don't register for that BTRC, they would not qualify for the exemption. And finance, again, per municipal code, would not be in a position to provide that exemption. Looking at those two issues, the Office of Finance recommends that the City Council and the Mayor provide finance with the authority, working with City Attorney, to amend the ordinances, the municipal code, that would provide finance with flexibility to grant a one-time waiver so that businesses which either fail to register timely or they fail to renew timely would receive either the small business exemption, the creative artist exemption, or the new business exemption for that one-time failure to meet the criteria. The thought being that once they received that notice that they didn't comply, but they were still granted the exemption, that on a go-forward basis they would at least have the education and the knowledge of what is required going forward. We believe by providing that flexibility to finance, businesses will be better served. The true intent of those exemptions would be realized, and we believe it would be a truly effective way of reaching out to businesses in terms of providing that exemption. Beyond the small business exemption and the new business exemption, Office of Finance is also looking at extending currently credits right now which are not able to be refunded because of the city's one-year period in order to receive a cash refund. Some of those credits end up being unused because currently, again, per municipal code, the Office of Finance only has a 3-year period in which those credits can be applied to a taxpayer's account, either going forward or backwards. The Office of Finance recommends that those credits be allowed to be used unlimited until point of exhaustion. Again, the thought being is that those payments were paid incorrectly, whether it's identified up front or through any type of enforcement action, and truly the city was not really entitled to receive those funds. So this again is an administrative correction that the Office of Finance believes would provide equity and fairness to businesses. And then we're also looking at the council to provide us with the authority, not so much in terms of a ordinance change, but we've looked at businesses that currently e-file, and based on the system that we have in place right now, businesses that have multiple locations have to e-file individually for each of those locations just because of the way our LA tax system is set up. The system is based on location, so it's location-based versus taxpayer-based. So if we have taxpayers that have multiple locations, they do have to go through some different steps to make sure that each of their locations is properly accounted for during the renewal season. We may be asking for a budget package to provide funds to reprogram our system, but we're looking at making those changes for the 2017 renewal season just because of the fact that the 2016 season is rapidly approaching and we will not have the ability to make those administrative fixes in time for the 2016 season. But that's solely for amending and modifying, reprogramming our e-filing system to allow easier capability for businesses to comply that have multiple locations. I would also add that in addition to the discussion that I had regarding those small business exemption and new business exemption, there is also proposal to examine whether the small business exemption threshold should be increased incrementally over a certain period of time, as well as looking at the new business exemption, which currently the tax holiday which was extended to a 3-year period and removal of a qualifying threshold. That action sunsets the end of this December 31st, 2015. So the Office of Finance was recommending an extension of the new business exemption for a 7-year period, or respectfully asking that this committee look at any other period to extend the NBE, given the fact that it is, again, going to sunset at the end of this calendar year.
All right. Before we go to questions, members, I think we'll go ahead and take our cards. Our first speaker, you can stay there because we're going to have questions for you. First speaker is Ruben Gonzalez, followed by John Howland and Alex Patrick Davis. Good afternoon.
Thank you, Mr. Chair, members of the committee. My name is Ruben Gonzalez. I'm here on behalf of the LA Area Chamber of Commerce. I know it'll come as no surprise that we come speak in favor of the improvements to the tax system, especially the increase in the threshold for small business exemption. You have to realize that we look at numbers and a lot of folks say, oh, several $100,000 or $1 million, how is that a small business? Well, small business designation is more about the number of employees you have as opposed to the amount of gross revenue you have coming in. And when you see a gross revenue number, the gross revenue number doesn't tell you exactly what the profit margin is. So in a lot of ways, if you're a business that's dealing with moving high-cost services or products through your business and out the door, you can be looking at as little as, 2, 3, 5% profit margin. So it's not like this is an exemption for millionaires. In fact, most small businesses throughout the United States on average are bringing in $3 to $5 million in gross revenue. So while we like the threshold being raised as it's proposed, we would even seek more if you're truly trying to reach that segment that for the LA economy uniquely is a critical foundation for our economy. We're a small business town. So with all that, we do support the measure. Thank you.
Thank you.
Good afternoon. I'm John Howland with the Central City Association. We also support the Office of Finance's recommendations, and we'll take a look at a few of them. Increasing the exemption, as Ruben said, for small business owners will help many of them stay afloat. The GRT taxes all revenues, even pass-through monies, and not just profits. Higher volume, low-margin businesses suffer. Increasing the threshold will help those types of businesses. And keep in mind, 1 in 2 small businesses close down within 5 years of starting out, so anything we can do to help them is very beneficial to the overall economy, especially to their employees. Similarly, when starting out, many small business owners are not aware that they need to register. Granting a grace period to comply and then qualify for the small business exemption is fair and reasonable, as is consolidating the multiple locations into one taxpayer formula that was discussed earlier. And extending the sunset date to 2022 is good policy. Businesses like the ones that move to LA and bring jobs with them need to know what the regulatory field will look like 5 to 10 years in advance. That's the usual perimeter, and this will help their decision making. Please approve the recommendations.
Thank you. Mr. Davis.
Good afternoon. My name is Alex Davis. I'm the Legislative Affairs Manager at the Valley Industry and Commerce Association, VICA, and we represent the business climate and the better quality of life in the San Fernando Valley. VICA has long supported efforts by the City of Los Angeles to get rid of the gross receipts business tax. Our Acts of Tax campaign has fought for 2 years to bring sensible legislation to the city. At its simplest form, the business tax punishes those seeking to create meaningful job growth in the city. Deterring investment has resulted in a significant loss of business to the region. The proposal before you is encouraging, but it is not enough. Every day that the business tax is continued, businesses will have less capital to invest in not only their employees, but in their communities. The extension of the small business exemption is projected to help over 70,000 businesses to qualify. This will bring millions of dollars back to the communities and the residents that need it most. While these efforts by the Department of Finance are commendable, we hope that it is only the beginning, that the end game is to eventually get rid of the business tax. There are over 240,000 businesses in Los Angeles. Please do something to help them. Thank you.
Thank you. And thankfully, most of them do not pay a dime of taxes, in part because of the small business exemption. So let me just say first that it's really unfortunate that we are in a situation where a lot of these small businesses are unaware of their entitlement to that exemption. And we've had circumstances, and I know finance has tried to deal with this on an ad hoc basis, but that we've had circumstances where someone has had no tax obligation at all, and yet they are retroactively subjected to tax and penalties because they failed to file the application, is really sends a very wrong signal to the business community in this city. And so I'm just as pleased as I could be about the recommendation for the grace period for small businesses. And for my own sake, I think we should move forward with that expeditiously. The other recommendations all obviously are matters that have impacts on the general fund. They are proposals that are important steps, in most respects, important steps towards making it easier for small business all businesses to understand what their tax burden is and to have some predictability. There are other proposals, as we've heard. There are many other tax proposals that this council has considered, that this committee has considered, and I think it would be valuable to have these ideas assessed by the CAO and the CLA for their budgetary impacts and consider them in the context of all of the other business tax reforms that we're considering, both in this committee and in other venues within the council. I will say that one issue of particular concern to me is the justification for the extension of the new business exemption. Because at the time that I voted for the new business exemption, I was not convinced that that exemption would attract any new business to Los Angeles. And now that we've had it for some time, I'm not convinced that it has had that effect. And unless we have some analysis that indicates with some sort of data that there is a cost effectiveness to giving a tax break to new businesses that are brick and mortar, good business citizens who've been here for 20 years are not entitled to, then I'd certainly like to see it. And that would help me to be persuaded that we should extend the sunset on this. Other than if we don't have that evidence, then I'd be just happy to let it ride into the sunset so that we could apply more thoughtful tax reform that applies to all of our businesses, not just those that come here to compete against the ones who've been paying taxes for 30 years. So I would like to see that report back, actually. What is the assessment of the cost effectiveness of this in terms of job creation and in terms of revenues for the city? Because it was proposed with the argument that by providing this 3-year tax holiday for new businesses, there would be an influx of business that would pay sales tax and pay utility users tax and fees and many other things that would more than make up for the loss of business tax. If we have that information, I would certainly like to see it. So I'd like to ask that come as a report back as well. But members, I'm going to open it up for discussion, and then my proposal is going to be that we move forward on the recommendation regarding the small business grace period. And as to the others, we ask for a CAO and CLA report back to this committee, and once we have that, we can make recommendations to the council. Mr. Bonner?
Yeah, thank you. Just a couple questions. Wholly supportive of all of this. And I want to thank you for the work on this. I think this is good stuff. I had a couple questions, though. Who is covered by the creative artist exemption?
The creative artist exemption was implemented by obviously prior council and mayor authority, and that applies to certain businesses that are in the creative artists categories. That could be anything from a writer to individuals in the film production business, but it applies specifically to sole entities. So it could be, for example, LLC, but it has to have a single member who is involved in that production activity. So there's a very specific definition. It's very narrow. It does not apply to any type of business entity that has more than one single member.
So it's freelancers, essentially.
In particular, yes. It could be freelancers. It could be a loan-out corporation that's comprised of one single member. But essentially, it applies to individuals or larger entities that have one single member.
Okay. So I have a question about that in particular. I think what we're discussing covers this scenario, but I'm not entirely sure. So if you could help clarify for me. A few weeks ago, mid-September, the LA Weekly did a story on freelancers and how by February of every year they were all supposed to send in a form declaring that they were exempt, and if they failed to do so, then they'd get hit with about $30,000. Is this the fix for that, or is that something different than what we're fixing?
Actually, the action that the chair is recommending would be a fix for that.
Great.
But as a point of clarification, that article did not provide an accurate picture because it referenced discovery work that the Office of Finance engages in based on state authority, the AB 63 program, but the Office of Finance does not issue assessments for $30,000, and we would not issue an assessment unless a prospective business that we're trying to determine whether they are actually engaged or not, based on information we receive from the Franchise Tax Board, they wouldn't receive a second notice or an assessment if they respond to our first inquiry trying to determine whether they are subject to the city's tax or not. But to answer your specific question, yes, sir, the action that's proposed by the chair would address that issue.
Okay. And then at what time of the year is a business required to report to you what their gross receipts have been?
The tax period starts on January 1st and runs through the last day of February, assuming it does not fall on a Saturday or holiday. So essentially a business has 2 months to complete their annual renewal filing, and the vast majority of our businesses are able to come online. We have approximately close to 3/4 of our businesses e-file. So even a business that has no obligation, they can easily go online, file in 5 minutes, and they've met their obligation. But the action that we're proposing as far as the grace period, that would address that situation where a business may potentially qualify for the small business exemption or the creative artist exemption. They're not aware of it, so we would give them that one-time exemption, assuming we receive that authority.
That's where I'm going, so let me just ask one more question about it. Let me spell out the scenario. If you're a business person in Los Angeles, you file, I think I'm correct on this, your federal, your state taxes on April 15, even as a business, just as individuals do. But you have to file something with the city 6 weeks earlier. Our filing is not the middle of April, it's end of February, right?
Correct.
I've talked to a lot of small or new business people who find that very, very confusing. And at least the anecdotes I've heard is that they've been dinged by that, and because they missed it their first year, they don't qualify for the small business exemption for the 3 years. They're out of the system entirely. Does this fix that problem?
It would, because I believe the fix, so to speak, is education. So not only does finance conduct numerous outreach engagements, we are actively engaged with a lot of small business associations, with entrepreneur associations, both through the mayor's office as well as council offices in terms of providing that outreach. But the whole idea is that having the flexibility so that at that first point of contact where someone becomes aware that, oh, I do need to file, and finance having the ability to waive any prior liabilities because they weren't aware, that will fix it. Plus, what we do on an ongoing basis, once we have a business registered, each year prior to the renewal season, not only do we send out postcards to those businesses that have e-filed, we also will send out renewal packages to other businesses. So we do a lot of outreach to educate businesses about their ongoing requirements, but definitely having the ability to offer a one-time grace period will address many of those issues.
So let me distinguish between what caused the problem and the fact that they have the problem if they've missed it. So if someone thought that because every other level of government has you file stuff in the middle of April, and they screwed up their first year, say 2 years ago, and are no longer eligible, this grace period will allow them to be retroactively eligible?
Well, first of all, just as a point of clarification, for the small business exemption, if they filed late, it wouldn't have any impact on their future ability to qualify for the small business exemption. So if they do file late, what we actually would do is we would go in and take a look at their account and see, okay, what is their history? If they filed previously, and let's say they filed on time, then clearly they were aware of what the renewal deadline was.
I'm sorry, not the small business, but the new business exemption.
For the new business exemption, again, the recommendation that Finance is making, assuming again that the council and the mayor act to extend the deadline, yes, that would provide us the flexibility to waive that and to retroactively apply the new business exemption up to the 3 years.
Okay, very good. I think that's a very good move. That's what I was looking at. In terms of the problem wouldn't exist if we had better enforcement or better education and outreach. I get that, but that to me sounds a little bit like they should have known better and we can help them know better a little bit more. Have we given any thought at all at any point to making our timeline the same as the feds in the states in the middle of April instead of the end of February?
Actually, sir, that question comes up periodically. That's really an issue that CAO would need to weigh in, as well as this committee, because the flow of tax receipts would then be impacted.
Right.
So there would be a cash flow issue that CAO would be in a better position to speak to. But that actual issue has been discussed periodically over the years.
Okay, I'd like to discuss that with CAO at some point, because the cash flow issue I get. Just want to make sure we're not sending confused signals to folks, because it doesn't really make a lot of sense that we have a different timeline for our filings than the feds and the state do. Thank you. Thank you.
Anything further? Mr. Bloomfield. Thanks. A couple questions. So these are all interesting proposals, and I want to do everything we can to promote business in the area. The small business one, that's a big deal. I mean, it's $54 million. We're looking for $100 million for homelessness. That's half that amount. So I would want to know that we're actually getting good bang for our buck, and I know that we were modeling this based on something in San Francisco where they had done it. Was there good empirical evidence that it actually brought more money back in the coffers in some way?
You're referring to, as a point of clarification, you're referring to the recommendation to increase the threshold. Is that correct?
Yes.
That would be an analysis that Finance certainly could work with the CAO, but we do not have the economic expertise to weigh the various factors that would arise from such an increase. For example, as the chair said, there could be, numerous issues in terms of, does it add more businesses? Does it add more jobs, employment, and so forth? So some of those issues in terms of what the overall benefit would be beyond Finance's expertise to look at.
Because somewhere in the finance report, it said the rationale behind doing it can be found in San Francisco. I think that came
Well, our recommendation was, in terms of the amount of the increase, was based on the small business exemption threshold in San Francisco. San Francisco, within the last several years, moved from a payroll expense tax to a gross receipts tax. That tax is being phased in, and as part of that ordinance change for the city, county of San Francisco, they did increase their small business exemption threshold to $1 million. As far as has enough time elapsed for San Francisco to determine what the impacts are, that's certainly something that we can speak to them about. But again, any type of report back, I would recommend be.
So the rationale was basically just because that was their number, not because we had some good experience there that we're able to play on.
Correct. We didn't have any specific
I misunderstood that.
economic analysis.
So misunderstanding that, but still believing that we should make these decisions based on metrics and data and go forward knowing that if we're going to be doing something that's technically lowering our receipts by $54 million, I want to have some assurance that we're actually going to be increasing our economy and ultimately, it sounds like the right thing to do. And in fact, I would go a step further. If it is the right thing to do, in terms of the time, we ought to index it, so we don't have to keep coming back and waiting for it to be just like we did with the minimum wage. In fact, I would probably argue we'd use the same index we used for the minimum wage on the CPI, a tweak of the CPI that we would apply to the business exemption. It makes sense to have a parallel inflator to go with it, but we have to figure out what is the right threshold, and I want to see the data to back it up. So maybe as part of the report back, we could have the CAO look into that data so that we can report back on that and know what the threshold is, and also look into the possibility of indexing it. Because if we're going to do it, we should we should stand behind it, and we should index it, and we should watch it, and monitor it as it moves forward. So that's one thing. On the rollover of the carryover of the non-refundable business tax, it seems a little open-ended as isn't there a time that we have to close our books? I mean, if you have a infinite carryover time, I understand the need for increasing it more than 3 years as folks get caught in that net, but don't we close our books after 7 years or 8 years?
Well, from an accounting perspective, I would defer to the controller's office, but from a tax perspective, essentially, we have our accounts open until liabilities or, in this case, credits are exhausted. Now, unfortunately, at the current point in time, those credits essentially would be deemed exhausted after 3 years. So a business, in many cases, through no fault of their own, may not be able to apply a credit over the course of 3 years, which is why we came forward with the recommendation, because we believe that it would be more equitable. But strictly in terms of tax accounting, no, essentially the account basically is going to remain open until whatever liability or credit is cleared.
Yeah, I guess maybe I'd want to hear in the report back the controller perspective too, because I get a little worried with an open-ended. I see the need, maybe 7 years, maybe 10 years. I hate the idea that 50 years from now someone's pointing back at carryover, and then we're in this awkward situation of trying to figure out what the liabilities are. The certainty of a time window is a good thing, usually, although the unfairness of that window as it currently stands makes a lot of sense to me. So I would in the report back look not just to the 0-1 option here of do we do it or do we not do it, but also what would be a fair time threshold to.
Well,
it's 3 now. And
just to clarify, though, the amount is determined in year 1. The amount of the eligible refund, that's not an open question. The question is how many years it takes to pay it back, considering they have maybe minimal tax obligation to offset it against. Do I have that right?
That is correct, sir.
So it's an obligation that, frankly, we owe to the business, and it's a question of how we get them back what we owe them. So,
correct.
But I think this should be part of the CAO report too. Whether there is some reason that there should be some out-year limitation on this for accounting or other reasons, and what it's going to cost. But I mean, in my view, this is probably one of those important steps forward. But we should do it eyes wide open to be sure. Anything further, Mr. Englander?
Yeah.
Oh, I'm sorry. Before you, I just wanted to say one other thing to Mr. Blumenfield, because you mentioned about San Francisco. The reason that they don't have comparative data over a long period of time is, as I understand it, correct me if I'm wrong, the gross receipts tax in San Francisco was fairly recently instituted. And it was recently instituted, by the way, at the strong urgence of the business community in San Francisco, or at least significant segments of the business community, who said, we need a gross receipts tax in San Francisco, because it was so much fairer than the payroll tax that they had in place before that. So just for the sake of the record, I thought I'd make that historical comment. Mr. Englander.
Thank you. And yeah, from what I understand, because it was based on just the per employee, not simply a payroll tax, but a per employee fee, which wasn't broken out by industries, and so they were trying to look at ways to actually make it a little more fair across the board. So that was right. With that, when I started here, there was no such thing as bad debt in the business tax classification. In other words, if you were a business and you actually billed somebody, hypothetically speaking, you billed them for $5,000 in services, and you never collected the money, they never paid you, you still owed the city of Los Angeles tax on that $5,000. If you billed somebody $5,000 or whatever amount, and it cost you $4,950 in goods, we won't even say in time, out of pocket, you owed $5,000 worth of your portion of taxes back to the city of Los Angeles. In fact, you still do. On the bad debt, finally, just a few years ago, we got rid of that, where you can actually write off your bad debt. If you never collected it, you shouldn't owe it. That's how antiquated and archaic our business tax structure here is. And we all know it creates an unfair competitive disadvantage to many businesses here. We also know that in the first few years of starting a business, it's your highest cost. Your highest cost out of pocket for equipment, for training, for tenant improvements and build out, for licensing, whatever it is you need to get for putting together the structure, filing with the state, everything you need to do, signage. If it's a storefront, you certainly have a lot more costs. Whatever it is you need to do, your first few years are your highest cost. And with that, nearly 50% of all businesses fail in their first 3 to 5 years. And so we put forth a business tax holiday not to create an unfair competitive advantage or not put out the welcome mat for the businesses that are here and have been paying tax for 30 years. We put it forth to try to lessen the load on those businesses that are going to be making investments or relocating or moving here to Los Angeles. We've also had numerous tax structures and abilities that have been eliminated over the years, like the enterprise zones in the state of California, where we had 42 of those, where you can write off actually up to about $36,000 of tax credit per employee hired under certain conditions. I'm also very supportive of moving forward with the idea that Mr. Krikorian has in place now, that hopefully we'll be hearing soon, on the JEDI zones, on the jobs development incentive zones for businesses.
I'm not committing to that acronym. I just want to make sure it's...
You put it out there as your motion.
I
thought it was cool.
A lot of debate about that.
Force is strong with that.
I keep using it because I've never heard it until I read your motion, and I thought, okay, JEDI, I'll remember that. So with that, there's been a lot of other different types of things out there. I'm 100% certain that if we invest in this business climate here in Los Angeles, that'll come back to us exponentially. We've seen it when we lowered the business tax. The last time we actually lowered the business tax significantly, we saw a $90 million return on that investment in lowering the business tax, and it was measured. The reports came back here to this committee and to City Council. One of the things that was asked for when we extended the business tax holiday last time is that we actually would track it, that we would come back and say, okay, here's what we've seen in gross receipts, here's what we've seen in new business startups, here's what we've seen in people filing and being more compliant. I'm very interested in seeing those reports because I think we need those arguments to move forward. I'm a strong believer that if we do extend, and we should extend, not only the business tax holiday, I'd actually like to see this thing go much further and some kind of long-term phase-out and elimination thereof. But having said that, I'd like to see the reports back. And as we look at the CAO report and analyzing these recommendations, and particularly increasing the ceiling, I think is critically important to be competitive, particularly with Northern California and others that are doing similar things with the same type of threshold. How quickly can we get some of these reports back, and can they be included with the CAO's report in looking at what we've been able to achieve with both the tax holiday, the reductions, and what we've done categorically? So it's because it is measured and it's measurable, and you've been doing that as a department. Can we get that information back with the CAO report, and what's the timeline for that?
Well, I would answer that two ways, sir. First, if you look at our report, there is a matrix that is attached that addresses the various business tax reforms that have been implemented and enacted and administered by finance over the last 15 years. So that matrix does outline, as a matter of fact, it does also address the bad debt issue that was covered by the first Business Tax Advisory Committee, as well as council and mayor. So the matrix has that, sir?
But the problem with that is that only has the impact. In other words, here's what our impact, not our benefit.
No, definitely. Well, certainly, again, finance from our perspective We've already initiated discussions with our CAO counterparts. So there is business tax information, number of businesses that have been benefited from the various exemptions that we are in the process of compiling, and we will provide that and work with CAO so that information is included in their reports.
If I could, here's what I would ask for it to come back, because what this really it classifies and categorizes in this matrix of what we've given away in tax relief, or what has been given in how many businesses. 12,765 accounts benefited from simplification. What I'm talking about is a whole other column that's missing, and that is, what is the direct return on investment by doing so, which is measurable. Of those businesses, how many are still in business? How many have grown? What are their receipts now? How's it coming back to our local economy? And I think we've got to stretch it further to make the arguments and not give it the appearance that some might look at it from a different lens of a giveaway or an impact rather than a benefit to our local economy. I think that's what I hope that's what we could get to, because this doesn't provide that information here, and that's what I would hope to see.
If I may, Melissa Krantz, Office of the CAO. We had this challenge the last time this report came around. Part of it is it's difficult to determine with the data that is collected by the Office of Finance to attribute what growth is from these exemption programs. We had mentioned the last time this came around that this might be something that would require outside analysis, in terms of drawing conclusions beyond what we can use with city data.
So let me ask you this. What it would take to get outside analysis or bring in some economists and work with them? We're talking about tens of millions of dollars, and it would be well worth it to us, I think, to make a small investment and look at the true analysis. We need to make informed decisions. And we're only seeing one part of the balance sheet, one part of the equation. It's not the entire picture. And it's not because you aren't providing it. It's number one, that's really not your function. Number two, necessarily, to extrapolate that type of information. Number two, I don't even know that you have the staffing or personnel or expertise, or should, to do that. It is achievable. So the question is, how do we get there? And perhaps it would be working with some economists or educational institutions, some universities. What do we need to do to make it's right around the corner. The sunset is about to happen soon again. That is, in fact, one of the elements you're asking to extend. And so to make the informed decisions, we're going to need that information, and it's well worth it, I believe, to make the investment into some additional reports that we're all looking for to make these decisions, which we just don't really have and can't be provided, obviously, by the city.
If I might add, we do have an Office of Economic Analysis within the CAO's office.
Right.
They have a list of on-call economists. It would be a matter of identifying funding to pay for such a study, and I would be glad to work with staff to define what kind of analysis would be appropriate to determine whether to continue this, and we'd have to come back and report on what that figure would be in order to have an economist.
I would ask for just for that then, if you could work with them to come back with what we would be looking at. I think you've captured it, so I'll say no more. Thank you very much. Appreciate it.
And Mr. England, are you referring specifically to the new business exemption sunset issue, or?
Both. A couple of the things. I would say that that's one of the big elements, the new business extension, but also anything else that is related into their report that for decision purposes that we have before us. So they have a number of recommendations. The question is, we're asking the CEO to study some of them, but we might have the ability to look at or need further analysis on some of the other ones under the same type of...
And a lot more to come, probably. So
right. So I think
at least numbers 2 and 4, the increase in the small business threshold and the sunset on the new business exemption.
I would say those are probably the two most important in terms of studying from a different perspective, not just the CAO of the impact, but the benefit.
So it seems to me extremely unlikely that we'll get outside economic analysis done by the time of the sunset date. So what I'm going to do this on the new business exemption. And I'll get to you, Mr. Chris, but just so you know where I'm going with this, I would ask that we get a report back on all of these issues within 60 days to this committee from CAO and Finance. But because of the pendency of that date, I'd be happy to advance that to council, but it'll be without my recommendation, because I'm not going to recommend its approval. But if council wants to do so, it should have that ability to do so.
Yeah, analyzing the new business exemption and its value is rather complicated. I mean, to start with, anecdotally, I've only had this conversation with a few businesses, but I've talked to new businesses, and the general response is, oh, I didn't know I had access to that exemption. So people are moving into LA, and then they're finding out that they have that ability to avoid paying those taxes for 3 years. So I think there are really two big separate questions. One is, when people come to LA for this exemption, how does it work out for us? You know, are we actually making or losing money? How many of those businesses stay in business, et cetera? Some of the things that were mentioned. But the other bigger question is, how many of those people that start up new businesses during this period come to Los Angeles and take the fact that that exemption exists into account? And how many aren't even aware that it exists, and they move in for a variety of reasons? I mean, I know an art gallery that moved from West Hollywood a few blocks away into LA. They found a more convenient location. It was a little closer to where they lived and less expensive, and they moved in. And they were completely surprised to find that we had those incentives. So how we do that is a big question, whether we would survey new businesses to get a sense. I mean, it would almost be polling more than analysis, where you'd have to ask a representative sampling, you know, did you move here because of this? Did it factor into your decision? Was it the complete reason? Were you completely unaware of it? And that's probably the only way we'd really get a good sense. If we just look at the statistics, you could look at, I don't recall how far back we offered this, but you could look at 2009 and you could look at 2014, and you'd probably get a very different result just based on the economy and the fact that more businesses are opening up right now because the economy's better. And they may well be in Los Angeles just because there were lots of open storefronts, and for a while that was an accessible opportunity. Now spaces are filled. Now we might have a reduction in new businesses, and again, it might not have that much to do with the incentives that would physically bring you to Los Angeles. So I don't know how we do that, but without some sort of a survey that gives us a sense of intent, if we just look at the numbers, they very well could be misleading.
Yeah, and I have no doubt that there are some businesses that for whom that's a huge factor. But since one of Finance's recommendations is a grace period for entitlement to the new business exemption, I would ponder that if a new business were moving here because of the new business exemption, they would know that they have to apply for the new business exemption, and chances are they wouldn't really need a grace period. So I'm thinking that the grace period
for the people that didn't know about it to begin with,
and are the lucky beneficiaries. I agree with you, Mr. Kretz, that's the difficulty in trying to gather this information, because there's some businesses for whom this is probably the critical issue in deciding where they're going to open their business, whether they open here or in some adjoining city. There are many other businesses that it's not a big issue at all. And
it would be very valuable to know whether 90% of the people move here because of that, or 10% of the people move here because of that. It could be a relatively modest number.
That's exactly the challenge.
Right.
Yeah, Mr. Blumenfield.
Maybe, even though it's complicated, it may be the kind of thing where either an economist or an outside group could help us get the data that we need to be better informed on this, in which case perhaps there is a middle ground on the extension. So instead of extending it until 2025 or 2022 when the 3-year to 25, we could do a kind of a holding pattern for a year and then commission an economic study of some sort where we're actually able to, we can lay out the questions that we want to have answered and then revisit it better informed. Because it seems like we're between a rock and a hard place. We either keep talking about it and it expires, or we just extend it this long period of time, and we're probably not going to spend the time examining it if we do that, because it'll be a moot point.
If that's a motion, I would second it. I think that's actually a very logical path on this particular one. Okay.
The actual motion would be to, instead of extending it for however many, 6 years.
2022.
What's that?
Till 2022.
Till 2022, we extend it for another year, and we commission, provided that we commission us and commission resources to a financial study to evaluate the impacts with a date certain when we'll come back and make a decision.
When?
It expires the end of this calendar year, December 31st.
Okay. I would propose, if you could, as a friendly, if you're going to look at doing that, I would not go year to year, just because it takes time for businesses to make decisions, and a lot of them that are, whatever they're doing, are far in advance of a year's time frame. I mean, I think it works for us. You're looking for a 6-year?
The recommendation was for 7 years to provide more certainty, given the fact that businesses enter into long-term leases. But that was the recommendation, sir. Yes, 7 years.
And it's a 3-year business tax holiday now, currently?
The exemption is for 3 years, correct.
So if you do another 3 years, in other words, instead of a year.
Yeah, or we do another 3 months instead of so we can actually make a decision on a 7-year. I mean, I agree. The longer term, I hate doing the short-term things because people need business planning. Right now, it's a very short-term thing. They only have it until December of this year. So there's a 3-month window right now, unless I've got my math wrong on our months. What do we have? October, November, December. No, that's right. So there is only a 3-month. We don't have 3 months is not enough time to get an economic study, but 6 months might be. So maybe we extended it for 3 months, forcing us to have a decision in 3 months where we can actually advance this for 7 years. If we do it for 3 years, we're not going to make the decision for 3 years. That's my concern. The longer it is, the shorter the window that the businesses are going to have. I'd like to get to a point where we have a 7-year window or an infinite window where we just get rid of it. If that's what the facts bear out, then why have a window at all? Why not just make it an outright exemption?
Actually, come to think of it, since it is a 3-year exemption, why were you recommending a 7-year period of continuing this?
Well, that would be for the extension. I think I should clarify that as long as a business moves into the city by December 31st, 2015, they would continue to receive the 3-year exemption.
For the full 3 years.
Right, for the full 3 years.
But if the business's predictability, if we were going to extend it for 1 year, by December 31st of 2016, if a business moved to Los Angeles by then, they would get 3 years of tax benefit following that December 31st deadline.
Correct. That's correct.
Right. So it's not 1 year of tax relief.
Right.
It's 1 year to apply, and then an additional 3 years of tax relief after that.
Mm-hmm.
It's a total of 3 tax years, including the first year in which they move in. So if a business moves in, let's say as an example, on December 31st, 2015, they would receive the exemption for 3 tax periods. If they moved in on January 1st, 2016, then they would not receive, the exemption would default to the prior 2-year exemption, so they would still receive a 2-year new business exemption if they qualified.
Mm-hmm.
But the 3-year exemption would still be applicable as long as the business moves into the city by December 31st of this year.
Gives us more time.
What?
Mine does that too.
Could you repeat that for Siri?
This was my thing. It would be nice if I knew where, but whatever you guys want to do.
So
Yes, Mr. Bonnet, please.
So what Mr. Blumenfield is proposing is, while we study, your first proposal was extend for a year, which gives someone up until the end of next calendar year to apply, and they get 3 years. So to me, that sounds like we're giving us the time to study, and it's also giving businesses 3 years, 4 years really worth of planning to do, so I'm comfortable with that.
And I only want to do this if we're actually going to put some money toward a real study to look at it. I don't want to be in this boat a year from now having only done a year, because I think there is a value to the long term. And I hate doing these one-year things, except if it's buying us the time to get that study, to get the real information, then it's, in my mind, it would be worth it. So it would be sort of do a year, but also at the same time, do a study.
If I could.
Yep, Mr. Hernandez.
Just shed some light on this, please, a little bit. If I could ask that we actually take these recommendations and forward them to the CAO and ask that they come back and look at, okay, here are the studies we're talking about. Here's what cost they would be. Let's make an informed decision rather than whether it's 3 months or 6 months or a year. How long would that kind of analysis take? How long would it take and how much would it be so we can make an informed decision and bring it all back as one piece to say, okay, this is what we're going to be studying. This is what the Office of Finance and CAO would recommend, that it's going to take us 6 months or 8 months or 9 months to come back with a very comprehensive, detailed report of what you're looking for, so we can actually make an informed decision rather than throwing darts on a calendar.
That's
and just
fine.
bring it all together as one vote. And how long would it take for you guys to put together sort of the parameters of here are the costs and here's the timeline and what we think you want to study?
I'd have to get back to you on that. I'm sorry, I don't really work with the Office of Economic Analysis, so I can certainly get back to you today. I would guess, I would hate to guess, maybe a month, but, because what they do is they have an on-call list, and they kind of develop what the proposals would be, and then the list would need to get back to them, whether they're interested, so even if we send something out, doesn't necessarily...
Sounds like we still have a little bit of time on this.
Well,
it's close.
We have 2 months.
Yeah, so we got time to make that informed decision of, okay, this is what we're actually going to study, this is what it's going to cost.
Okay.
And then that's what I would ask.
That'd be fine with me.
I actually disagree. I don't think we have time. If someone is trying to decide now whether they're going to start or relocate their business in January or February, they need to know before we make a decision on whether or not that this will apply in January of next year. So I'd recommend that we know we won't have the answer on whether or not there's a value in extending this with empirical evidence by the middle of December when we go on recess. I think it's difficult to imagine that it would take us more than a year to get that study back. So given that, I think it makes sense to extend for the year, do the study. We know we'll be doing a study of some sort in that period. And then we're giving folks some certainty who are on the fence about moving at least at the beginning of the calendar year.
Good argument. You sold me.
Okay.
Mr. Kretz.
And I would agree, but I would just ask that as we do the study, as I mentioned, that we include a request for survey information and don't just try to use data without getting some survey data as well.
Anything less than that would not be in the slightest persuasive to me. I can tell you that. How much do we give in new business tax exemption on an annual basis?
I believe the last time the report was written, we were estimating that the impact would be about $16.8 million annually.
Okay, so eyes wide open, members, we're committing $17 million in lost revenues now by extending this for 1 year.
Well,
that's what we're voting on right now.
Well, sir, if I may provide some updated statistics for 2014 and to date for 2015. In 2014, approximately 12,000 businesses received the new business exemption, and the credits they received were approximately $23 million. To date in 2015, again, about 12,000 businesses have received the new business exemption, whether it's the first year, second, or third year, and the credits have totaled in 2015 to date just under $28 million.
Okay. So just so that we're all clear in discussing this, the 1 year extension we're talking about would pay for 28% of what we've talked about setting aside for homeless relief in this city. Doing this 1 year extension. I just want to put it into context.
Well, but contextually also, by not doing it for the 6 years, we're saving, if it's $28 million, $140 million in not foregone revenue.
Thank you. That's a much more optimistic way of looking at it, Mr. Blumenfield.
In fairness, there's some value to this. The argument is made that there's more than $28 million worth of value a year to this.
Fair enough.
I'm very skeptical that that $28 million is necessarily there, but we could do surveys and find that it's $23 million worth of value, and it wouldn't surprise me. So I don't think we're making a decision on that whole amount. There's obviously some offset. It's just a question of, are we losing a few million a year? Are we gaining a few million a year?
You're absolutely right. I withdraw the prior comment.
Well, it was
But you get the point.
to argue with me.
But you get the, well, and by accident, my friend.
And if I could just add one more argument, that's $28 million that, if you just run the math, if based on the new minimum wage at $15 an hour, that's employing 36,000 people. That's going back to working full-time, 40 hours a week, 52 weeks a year, 36,000 people, that money could potentially go back into the pockets of Angelenos. Just saying.
Mm-hmm. Yeah. And how many streets are paved?
Mitch just got me back.
Well, I have a good answer for that one, too.
Okay, I'm sure you do.
All right, I think
but I won't even use it.
I think we have about beaten this now to death. Let's see if we can summarize now. So the proposal is to advance recommendation number 4 with a revised date of December 31st, 2017.
Correct.
Is that the motion? And then my suggestion at the outset was to advance recommendation number 1 with our recommendation to council to approve that, and then to ask, we'll advance recommendation number 4 and just I'm going to be a no on that, but we'll advance that to council with the amendment proposed by Mr. Blumenfield. Then items 2, 3, 5, and 6, those will ask for a report from CAO and Finance to come back to this committee in 60 days regarding the potential budgetary impacts and economic development potential of those recommendations for further consideration by the committee.
Number 4 went from 2022 to 2016.
Oh, I'm sorry, 2016. Yes, I'm getting ahead of myself. 2016, yeah.
But that's number 4.
Yes.
But
Yeah,
that
Mr.
recommendation will hopefully also include, when it comes to council, the cost and the process for engaging the study.
Well, I don't know if we'll have it ready in time for council, but
Or at least the commitment that we are going to do such a study?
Yeah,
Or
and-
something to that effect. I mean, I don't want it to just be on its own a one-year extension and then we kind of let it go. The important thing is that we're going to spend some money to study this thing. And get,
Yeah, then the recommendation was that it come back with what's the study going to be and how much it's going to cost. Can we ask that come back within the next 2 weeks?
For the cost, I will have to work with our staff to see if 2 weeks is possible to come back with cost.
Well, those are city weeks.
just,
Okay, yes,
Yeah,
we could
thank
definitely
you.
do city weeks.
yes.
It'd be nice when
we'll have that come back
when
here.
that come back here, but when they both go to council, if those two were together, that would be helpful. I mean, obviously, if it's costing,
We get into a little bit of a timing challenge on that, because if we're going to report back here in 2 weeks with that information, we have some downtime around holidays and so on. I don't know about scheduling at council if we'll have all that ready.
that's fair.
Anna, do you know when this would be set for council, or do we not know yet?
We don't.
Okay. Okay, so just on that point then, we'll ask for CAO to report back with the analysis options. We'll go ahead and move this forward to council anyway, notwithstanding that, with me as a no. And after we get those recommendations back here, we'll move those forward expeditiously to council as well with whatever we think would be the appropriate economic analysis path on that. Okay? Any of that make sense?
I'm sorry, Mr. Chair. Richard Williams, City Clerk. Let me just make sure I understand correctly.
Okay.
We are moving forward item number 1 from the Office of Finance report with a revised, I'm sorry, we're moving forward recommendation number 4 from the Office of Finance report with a revised date of December 31st, 2016 as a sunset date for the new business exemption.
Correct.
And then we're moving...
That's on 4-1 vote, with me as a no.
Okay. On that recommendation only?
On that recommendation only.
Okay.
Should that point, since there was such a confusion about when the sunset actually was, that it's instructing Office of City Attorney to amend LAMC 21.30 to extend registration for or application for or signing up for the new business exemption sunset date too? Because it's when you join it, it's when you register for it, or you become, or eligibility for it or something.
Well, so the eligibility actually starts when you move into the city. So once you start your business, that's when you become eligible for it. And it's only for 3 years. So if someone, let's say, didn't register and we discovered them in year 2, it wouldn't extend the 3-year period. It's still a 3-year period. So they would be, if someone moved in, as a point of clarification, if a business moved into the city by December 31st, 2016, they would qualify for the new business exemption for 2016, 2017, and 2018.
Right.
3 full tax years.
So extend the eligibility for, is that?
No, the sunset, the sunset date.
And the city attorney can work that out. Yeah. Okay, Mr. Williams, you were, so number 1.
Okay.
You got?
Okay, so, I'm sorry, move forward recommendation number 4 regarding the sunset date of the new business exemption with a revised date of December 31st, 2016. That would be a recommendation to the city attorney to draft that ordinance.
Yes.
And then recommendation number 1 from the Office of Finance report to request that the city attorney prepare an ordinance regarding the grace period.
Yes, that is as recommended by Finance, and that is unanimously approved.
Okay.
And then numbers 2, 3, 5, and 6.
A report from the CAO in 60 days regarding a potential budgetary impact and economic potential, and for the CAO to prepare or to report back with potential costs for outside economic analysis.
Actually, all of those items would be a 60-day report back, except that last part.
Okay.
And that would be reported, but the economic analysis options on the new business exemption would come back within the next 2 weeks or so.
In time for it to be considered by council?
If it is, it is. If it's not, it's not.
Okay.
Just because of the press of time, we may not have that luxury.
Okay. So unanimous for everything except recommendation number 1.
No, 4.
Number 4, which is a no for you.
Correct.
Okay.
All right.
And on recommendation number 2, we talked about CAO looking into the possibility of indexing as part of their report.
Okay. Okay, that will be the action of the committee. Everything that he just said. All right, thank you all very much. Thank you for your work on this. That brings us now to item number 10. And Mr. Englander, I'm going to let you take the lead on this.
Well, thank you. And I know there are a number of speakers here that have been waiting from the beginning, and I appreciate it. Yeah, truly appreciate your patience in this. And colleagues, what we're looking at, this one actually should be pretty simple because we're only going to be looking for recommendations back and some guidance. But essentially, in looking at this, we have surgically and very carefully eliminated some business tax categories for certain industries. And as an example of that, new car dealers. We did a few years ago. And we have shown that that investment has really brought back. And those were dollars that not only we can point to, and a lot of people can argue, well, the economy's gone up, we've sold more cars, except for the fact that we've actually opened up new car dealers that would not have, and we know it with certainty, would not have come back to Los Angeles had it not been for that. And in fact, I believe the current number is around 9 new car dealers. And if we look at tax revenue that comes back from that industry, we know with certainty that we're benefiting, and it was well worth the investment. Having said that, if you look at biotechnology, bioscience, and what's happening in that space is one of the fastest growing spaces in and good paying jobs. We're not getting out of it what we're putting into it as a region. As an example, here just in California from life sciences and looking at that global expansion, life sciences gross product, they doubled from $6.5 billion here in 91 to $13 billion in 2000. That's an 8% compounded annual growth. But we're seeing most of that growth in the South Bay and in San Diego. We're not seeing it here in Los Angeles. And in fact, we've graduated roughly 5,000 employees at that level, potential employees out of our universities here in the county of LA, and roughly 2,800 graduates in Northern California, yet they've exponentially gotten so much more in investment. And really it's come down to a partnership of looking at, and I think Max Nikias said it best in his op-ed piece, the president, CL Max Nikias, in his op-ed in the LA Times back in February, that everything from medical device manufacturing and biopharmaceutical development and the latest diagnostic tools, there's no doubt that this is the most important advancement in humanities investments for the 21st century, and that the universities here in Los Angeles produce more than 5,000 graduates in biotechnology-related fields each year compared to the 2,800 in San Francisco, Oakland, Fremont, and other places. And however, San Francisco's attracted $1.1 billion in investments compared with here $45 million. Again, $1.5 billion in investments compared to $45 million here locally, which is why our graduates are moving north. And Los Angeles requires that an ecosystem that fosters that business venture capital investment and access to academic medical centers, but also a partnership with local government, which is what they've been doing both in San Diego and in San Francisco. And so if we could just go over, I know we've got some cards here, and they've been sitting here for a while. If we can ask some of our guests to come up and speak, sure, that would be great. And thank you.
Be terrific. Thank you. And thank you for your leadership on this, Mr. Englander, and on the other example that you just raised. All right, let's start with Bob Machuca, representing the LA County Economic Corporation. Welcome.
Good afternoon, Councilman. Again, thank you. I'm Bob Machuca. I'm the Regional Manager of Business Assistance for Economic Development with the LAEDC, the Los Angeles County Economic Development Corporation. I'm sorry, do I only have 50 seconds? I thought I had 2 minutes.
You know, without objection, members, let's go ahead and make it 2 minutes for this item, because this is, somewhat substantive and,
Thank you very much. Okay. Again, as someone who works every day with the businesses in the San Fernando Valley and the San Gabriel Valley, I'm here today to support Councilmember Englander's motion to reduce or eliminate the city's gross receipts tax on biotechnology firms that are domiciled in the city of Los Angeles. We all know that the LA regional economy is fast transitioning from a production-based economy to an information age one. This information age economy is typified by innovation-intensive industries such as biotechnology, which is one of the few innovation-oriented sectors that has good jobs along the entire value chain continuum. Indeed, from skilled machinists to technicians and clinicians to engineers, scientists, and researchers that will develop the next wave of life-saving therapies and medical devices, the biotechnology industry has high-value, high-wage jobs for every type of job seeker. Biotechnology firms, like other traded industries, by definition, bring process technologies out. They bring outside of the region. They're located bringing capital investment prosperity back into our region. So really, I urge you to consider unraveling this business unfriendly perception by reducing or eliminating the widely provided gross receipts business tax for biotechnology firms, either through a phased approach or in its entirety. We must all work together to reverse the city's reputation for being unfriendly to businesses. Eliminating this gross receipts business tax for competitive growing and traded industries such as biotechnology is a great way to positively transform this reputation. In turn, this will put us in a better position to attract, retain businesses that provide the greatest direct, indirect, and induced job output and fiscal contributions, which will go a long way in catalyzing the inclusive prosperity that we so desperately need. I also wanted to conclude by saying that the LA EDC also does economic impact studies. So I gave the lady here my card. Please contact me. We have a staff that can do that for you. Thank you very much.
Thank you very much. All right, our next speaker is Robert Moworthy, followed by Ruben Gonzalez. Good afternoon, sir.
Good afternoon, Mr. Chairman and members of the committee. I appreciate the extra 60 seconds. I have an accent. Name is Rob Moworthy. I'm Regional Vice President for Operations for Quest Diagnostics West Region. Here today to convey Quest's strong support for the motion introduced by Council members Englander and Krikorian to reduce or greatly or ideally eliminate the city's business tax on the biotechnology industry. Quest Diagnostics is one of the nation's largest clinical laboratory operations. We provide testing and reporting for probably 1 in 3 Americans every year and probably 50% of all physicians within the U.S. We have nearly 2,000 employees working out of a 200,000 square foot facility in West Hills in the San Fernando Valley. It's actually the main lab for Quest Diagnostics West region, which extends all the way from Russia to Mexico. So it's a very, very large territory. Quest and our employees love being in West Hills. The issue we have is the City of Los Angeles business tax system. We're taxed at the highest rate, and our tax liability is well into 6 figures annually, and that's generated across the whole of the West region. Quest agrees with the important policy directive raised by Council members Englander and Krikorian in their motion. The biotechnology industry, which clinical labs are a part of, is a major economic driver in the city of LA. Unfortunately, the city's business tax puts LA at a competitive disadvantage when it comes to retaining and or growing this important industry. Companies like Quest can and must consider operational costs like the city's business tax when deciding whether to stay in the city or look elsewhere to conduct business. Quest is genuinely pleased that the city understands how important these issues are to Los Angeles businesses and that the city is looking for ways to stay competitive. Thank you for your leadership on these issues.
Thank you very much, sir. Ruben is gone. All right. Mr. Howland, followed by Michael Spear.
Good afternoon again. John Howland with the Central City Association. Ruben gave me his proxy on this, but I will not take.
He didn't give you your time.
I don't need his time. Again, John Howland with the Central City Association. CCA and the Los Angeles Area Chamber of Commerce have actively supported across the board's gross receipts taxes in the city of Los Angeles. We believe that they'll spur business activity in the city, which will help backfill the cuts. These reductions act as a signal to companies looking to move to Los Angeles and ones that are considering whether to relocate out of the city of Los Angeles, but the city values their business and the jobs that they create. Mr. Krikorian, when we met about those across-the-board tax cuts, you said you favored them for directed at businesses that are highly mobile, that create good jobs, and that's exactly what these jobs are. The biotech and the biomed industry are highly mobile. They pay very well. They have a wide range of jobs. And more importantly, there's a great deal of competition, not only around the area, but around the country and even around the globe for these businesses. And they bring the good jobs not only in their own business, but they create a lot of corollary businesses in their clusters. Be expansive in your definition of what a biotech and a biomed industry company is. Be bold with your tax reductions. Keep and bring jobs to LA. Thank you.
Very good. Thank you. Our next speaker is Michael Spear, followed by David Galavis. Good afternoon.
Good afternoon. My name is Michael Spear, and I'm a Senior Vice President at the Brookfield Property Group. We are here today to fully support the motion before you involving efforts to encourage the biotech and biomedical industries in Los Angeles. Brookfield invests heavily in this city because we understand its potential. Los Angeles is perfectly suited to be the next biotech hub. We already have much of the infrastructure needed to support this industry, as well as world-class universities, hospitals leading the way in research and important clinical trials. Brookfield supports all efforts to encourage and support biotech and biomedical companies in our city. We welcome the city's study in determining the feasibility of various incentives for biotech firms and those companies that support biomedical research already situated here in Los Angeles and hoping to stay, and for those interested in relocating jobs to Los Angeles. That's it. Thank you for your time.
Thank you, sir. And our final speaker, representing one of the finest universities in all of America, a center for technological innovation and entrepreneurship and the practical application of those things in Los Angeles' economy, the University of Southern California, Mr. David Gallagher.
What pressure? I have to leave this meeting.
10 minutes. That's right. What pressure. Thank you for that introduction. David Gallagher is here representing USC. Here in support and here to thank Councilmember Englander for basing portions of his motion on the February 23rd op-ed written by USC President Max Nikias. I want to leave the members with two key points. First, as was pointed out, Los Angeles universities, and again, I can't understate this enough, this is not just about USC. We've been talking to other universities, we've been talking to community colleges, we've been talking to other private universities. We've been talking to the LAUSD about what we can do to develop this partnership. Los Angeles universities not only produce over 5,000 graduates in the sciences, engineering, and technology, as was pointed out, more than San Francisco and San Diego combined, but Los Angeles ranks 14th nationwide in biotech investment. That's, in our view, that's the equivalent of the Dodgers, Lakers, Clippers, or the Kings drafting players, training them, and then letting them go to other teams to win their championships. That's how we view that. That's how important this is to us. Secondly, as I pointed out, we've been working with other universities and the County of Los Angeles to develop educational pipelines that not only would ensure that your constituents, that USC graduates and others, would be prepared and trained for the jobs that would be created. For us, that's also a big issue. As I mentioned LA County. LA County also set up a biotech task force that meets regularly to discuss what can be done to develop a regional perspective that would impact not only the city of Los Angeles, but the surrounding community. And finally, for our administration, biotech is a major priority, and we look forward to working with the city, with other universities and others to really develop a new economic engine that we feel can really benefit the entire region. So thank you for your time.
Thank you. Mr. Englander.
Great, thank you very much. And I just want to point out for clarification that this was actually a partnership motion that was co-authored by Councilmember Paul Krikorian as well. So with that, I also want to point out that UCLA also recently broke ground as well and on biotechnology and bioscience buildings and labs, and they're making a major investment in the space. And so really proud to hear all of our universities are actually stepping up and CSUN and putting together their innovative fund and biotechnology and research as well. I see this future, these future graduates, we don't want to export them out. And looking at the Battelle
schools, by the way.
Great schools, yes. The Battelle study that came out under the Business and Innovation Plan for Los Angeles, it simply states the ingredients of building a critical mass of the biosciences in states and regions include, and they have to be all of these ingredients, engaged universities with active leadership, so we can check that off. Building entrepreneurial cultures with intensive networking across sectors and with industries. They've been doing that as well. Available capital covering all stages of business cycles, which we do have here in California. Discretionary federal or other R&D funding, which is now stepped up. Workforce and a talent pool, which I think we've shown well that we're graduating here locally. Access to specialized facilities and equipment, which is exactly what the universities have been opening and investing in with their capital expenditures. And the most important, supportive business, tax, and regulatory policies. And so that's what we're here discussing today. One of the problems that we've tried to get our arms around with the Office of Finance is that in its simplest biotechnology form and of technology and based bioscience, trying to harness exactly what that might mean in a definition under the tax categories is very difficult. We've got NAICS codes here that really break out medical and diagnostic laboratories, medical equipment and supplies, pharmaceutical and medical manufacturing. We don't really have the definitions in our codes. And so I would ask that, that we ask the Department of Finance to work with our office, and Nicole Bernson has been working very closely with the universities, and as well as looking at some of the classifications and definitions, and we can work together to come up with a definition of what they would mean. And they would again fall into the self-declaration and how it is, we currently do it categorically, but we need to define the universe, because right now the universe is pretty broad. If we just call it biotechnology or bioscience, we need to ensure that the labs that meet those criteria are actually investing in and looking at research as well, and the types of jobs and employment we're trying to capture in this space. So we want to provide that very specific language into what that sector is. And so I would ask that the Department of Finance come back with some recommendations in the next 45 days. And if that's a reasonable amount of time, and we can work closely with you, we've got reports here as well that will help define it, both from Battelle as well as a California Life Science Action Plan that was written specifically for California that will define that space much better. That would be my recommendation.
Yeah, and that actually is captured, I think, in the report back language of the motion, as to have that report back from Finance with CAO and CLA. And so, although the motion also called for the drafting of the ordinance, it seems to me in order, Mr. Englander, that we get that report back first, and then that will help us to define what we instruct the city attorney to do in terms of the actual drafting.
And if we can get it done quicker, certainly that would be great. But
okay. Yeah, Mr. Kretz.
Yeah, this is a slightly more difficult decision than the one that was referenced with new car dealerships, because that was more easily quantifiable. We could see how much revenue we lost over the years. We could see how much we would gain by eliminating the business tax. I think we calculated that if we had 4 or 5 new dealerships come as a result, we'd break even. I think we had that many already committed to doing so if we passed it. And so we knew we at least break even. We certainly will add more. And we're making money by eliminating that particular business tax category. In this one, I don't know if it's that cut and dry. Intuitively, it makes sense that this is an industry we want to attract. But have we looked at how we compare with other places that are doing well? Is San Francisco a great business tax example, or do they actually have worse business tax setups than we do? I'm not clear on that. So if San Francisco is doing well and their business taxes are not any more incentivizing than ours, then are there other factors that we're not considering rather than just this tax?
Let me just read this number again. And again, all we're looking now is the definitions on what it would mean, so then we can figure out and ask those specific questions.
And I'm open to that, but I'm just saying this is something we should be looking at to make sure. I mean, we all agree most or all of us agree we'd like to eliminate the business tax if we could and we could afford it. And it would have to be replaced by other revenues. So
in looking at this, and you, again, going back to San Francisco, you asked about San Francisco. San Francisco has attracted, just in 2013 alone, in 2013, which are the latest numbers out of San Francisco, they've attracted $1.15 billion in biotechnology investment. Categorically, in the way it's defined today, compare that to here in Los Angeles, here it was $45 million. So what that means then, and what it comes back to in terms of jobs, is we've got not only all of the folks that are just graduating here from our universities and moving to find jobs in that space, which then they're investing in the local economy and buying homes and starting families. And we can, in fact, extrapolate that information from there, and it's coming back to us exponentially in goods and services and
But how's their taxation related to ours?
The short answer to that is that is what we're asking.
That's what we're asking for.
And in fact, the report will include summary information on policies and tax structures by other major cities that have
which we put in the motion.
Encourage biotechnology. That is part of what we're asking for in the report back. Exactly that comparison. So yes, Mr. Bloomfield.
Yeah, I might also want in the report back some comparative analysis with similar type of industries. Why biotech and not nanotech? Why biotech, not green tech? Why biotech, not high tech, aerospace, entertainment? There's a lot of great industries that have a similar kind of thing. Nanotechnology, we're leading in our researching on that at the other institution, the UCLA particularly. But I'm down with both of them.
I was going to say, it's a fine school.
But I'm saying, we need to attract all of these folks. So maybe, either we broaden it, maybe look at a lot of the tech sector, or we have some sort of comparative analysis why we're choosing one over the other. And
well, so I can address that briefly. That question will be one of the questions that will be central to the discussions that we're having in the jobs creation ad hoc hearings over the next few months. So targeting tax relief in areas like the ones that you mentioned and others will be something that we will be looking at. I would recommend against sweeping this one into the larger picture just because this either stands or fails on its own merits, and let's hear the report back and see if it works.
But why wouldn't it stand? All of them.
Others may as well, but we haven't advanced forward on those yet.
Yeah, I don't see the difference. I see it as very important in the biomed and Quest, out in the West Valley. I get it. It's incredibly important and burgeoning industry. I'm just trying to figure out the comparative analysis and I'm not, industrial policy is not a dirty word to me. I like industrial policy from a city perspective. We can do things, we can incentivize through the taxes. I just want to, eyes wide open, know why we're choosing one over the other and then do it.
Mm-hmm. Legitimate question. I would just say let's get the reports back on this and then we can have, those other discussions with similar reports back as well. Any other questions? All right. Thank you, Mr. Englander. If there's no objection to this, it will be, just to clarify then, so we're amending the request in the motion to hold the request for drafting of the ordinance, and we're going to ask for a report back to this committee in 45 days on the matter stated in the motion and that we've discussed here. I think it's all contained with what's already in the motion language, unless I don't think we really added anything that wasn't already stated. So, but the point is, it'll be the report back, 45 days, not the drafting of the ordinance at this point. Okay. All right, that'll be the action of the committee. That brings us to item number 11. Thank you for your patience. Good afternoon.
Good afternoon, Lori Hancock with the CAO.
We're building a bridge. Tell me about it.
On September 17th, 2015, the Seismic Governance Committee considered a Bureau of Engineering report recommending $41.2 million in additional funding for the 6th Street Bridge. After review of that and hearing public comment and hearing from the stakeholders, the Seismic Governance Committee adopted revised recommendations that will allow for the completion of the project as it's envisioned and construction of the landscape amenities that are beneath the bridge. The Seismic Governance Committee recommends that $23.92 million be authorized from MICLA commercial paper as interim financing that would be converted to long-term financing. These are for elements that are key to the project design as it's currently designed. And the funding is required this year to allow for construction to move forward to be awarded to the contractor. Those elements are listed in Table 3-4 and Item 9 on Table 5. An additional $17.3 million is required over the next 2 years for components that will be built further on down the way in the project. The SGC recommended that the Bureau of Engineering seek funding for this through the budget process and then seek grant opportunities to reimburse the general fund for those elements. When the project's completed, we'll be converting the MICLA CP to long-term debt. As a component of the lease revenue financing, the SGC has instructed our office to find another asset that is a city-owned property for the $23.2 million that could be used as an asset transfer and for the leased asset. There's a fourth recommendation that is consistent with the BOE report, and that is to instruct the Bureau of Street Services to include portions of Clarence Street, Anderson Street, Mission Road, under the 6th Street Bridge, to include them in their annual street resurfacing program at the completion of the project, which is going to be completed in 2018 and 19. MICLA is a general fund obligation, and so there is an impact to the general fund. The financing, the total debt service for the 23.92 would bring the total to $37.71 million. That's approximately $1.88 million over a 20-year period. So, do you have any questions?
In general, what's the distinction between the project elements that would be funded with the $23.9 million that would be MICLA financed and the $17.3 million project elements that would not be?
The $23 million now are included in the project as it's currently designed, and the design for those elements is included in what Caltrans will be paying for, say, landscaping or any of those other components. Then we would be funding those with the MICLA financing. The 17.2 are elements that come later on down in the project. They don't need to be included in the construction contract now. We can continue to design those things, and they're mostly landscaping things that go on after the rest of the construction is done. So we don't need the money at this time. We would not be expending it.
Okay, but with our action on the recommendations today, will we be making any irrevocable commitment with regard to that $17 million? In other words, if you move forward with certain project elements, does it necessarily imply that these other project elements will become necessary?
No, and that's why it's structured that way.
Okay, so we can approve the MICLA funding.
Yes.
And make recommendations that you go seek the grant funding on the $17 million, and a year from now, 2 years from now, we can decide we kill the $17 million and the bridge is still going to get built and the $23 million is still going to get spent.
As it's structured now, yes.
Okay. All right, members? Anything further on this? Wow, really? you just punch drunk at this point?
Yeah.
We're not? Okay.
We took out the MICLA financing.
All right. Oh yeah. You were going to move to remove the MICLA financing for the... No, the recommendations are to authorize the commercial paper totaling $23.9 million. And then so on recommendation number 2 on the asset transfer method thing, what if we don't find a good, suitable, city-owned property within the next 6 months that how does that process work?
Natalie Bro from the CAO's office. We have properties that we look at. The problem right now is we don't have any properties been appraised, so we need a few months to get them appraised. We usually look for asset transfers. We look at libraries, police stations, things built not with MICLA, obviously, because those are already encumbered. But it's going to take us a few months to go through our list of what's already been encumbered and actually get GSD to do the appraisal for us. So we're just giving ourselves a few months to do that. In the meantime, the commercial paper already has 27 assets in it that can be used as the asset until we refund it into long-term debt. The problem with these projects is they're not truly MICLA eligible, so they can't be used as the asset. let me rephrase that. They're not that they're MICLA eligible, they can't be leased, right? You can't lease grass, you can't lease some of the elements that we're constructing. It doesn't mean they're not important. It doesn't mean they're not part of the capital that's being built. It just means under state law it's difficult to lease them as an asset, and the market won't accept them. That's really the main reason. Same thing, they don't accept computers, they don't accept servers anymore. You know, things have changed in the last, over time. So the asset that we lease will be property, and we all know that property is something that can be leased. So that's why we did it. The best example of, you know, this is not the first time we've done something like this. When we have a very large project. You know, this is a $420-some million grant-funded project. You know, to say that out of that amount, $23 million, you know, is for something that is important but necessarily can't be debt financed, you know, we look at the asset. That's what the asset transfer is for. It's really for those projects that are so important, we need to finish them, and we finish them by doing the asset transfer. It's not uncommon in the industry. It's very accepted by the industry. So these are, you know, something that the mayor is a priority for mayor and council, and the solution is to fund these with that asset transfer.
Okay, very good. Anything else on this, members? All right, there being no other comment, no objection, it'll be the action of the committee to approve the recommendations as stated in the CAO's report. Thank you very much. Is there any other business before the committee?
Mr. Chair, this item is in council tomorrow, October 7th.
Okay, you know, there was amendment language. Yeah. Okay. Okay. All right. As stated in the report then. Okay. There being no other action before the committee, we are adjourned.